Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having a phenomenal day. Another look here at Bitcoin, seeing what's going on. It's performing very similar to what we expected. Only difference is it didn't come up to bounce off that golden pocket, the descending trend line, that 50-day SMA. It effectively continued lower to that more recent local support, as I've identified, is a 0.382 macro support level, but also a local low, essentially. So we should experience some support there. I don't think we're just going to blast straight through that, but at this point, honestly, it's hard to say. But what we want to look at is a few key factors, such as liquidation as low as 60 or 59,000, because you got to keep in mind, folks, we do have a solid CME gap here, pretty big elephant in the room down below the price action right now. Would not be surprised if we see the price continue lower to hit that level. So again, just be prepared for the worst. If you expect the worst and hope for the best, generally you land somewhere in the middle and it's all good, right? So try not to get too crazy with longs right now. I know it seems tempting to just keep buying the dips, but this thing's when you dip, I dip, we dip, that whole thing, that's what's going on right now. Okay, so let's take a look at Bitcoin. Back in liquidation data, actually let's refresh, make sure we got a good fresh chart, and then just kind of see here, because we want to start seeing more liquidation to the upside, just kind of like a lot more people trying to short this coin, right? And again, not like there aren't people doing that, it's definitely present. It's just that you can't really see a lot of liquidation above the price action here, which is good because we're not getting, people aren't getting too over the top with shorts. Kind of like we saw back here previously, this area is starting to dissipate at 70,000. We're starting to see a lot less liquidation there, basically just implying that shorts are securing profits, which is good. I'm happy. I'm proud of you. Whoever it is that you were doing that, good job. Now, when we take a look here at the local timeframes, we can see it's starting to get a little more sparse, which is also good. But if we look at the monthly here, this includes previous and current liquidation data over the last 1 month, last 30 days. We can see each one of these bars is roughly worth about 5 to 6 billion. So if you kind of do the math on all this, there's a really large amount of liquidation still to the downside as low as 60,000. Now it gets kind of crazy down as low as 52 to 54,000. I don't subscribe to the price going that low, but that is still a distinct reality. Keep in mind that leverage there, those are some super low leverage longs that are entering the market ever since the price wicked down to about 65,000. So that includes a lot of late longs that are likely in the red right now. Okay, so try not to be one of those persons that just holds on to forever, because again, it's a different story with spot trading. I guess I have a pretty large spot bag and I consistently add to my portfolio whenever the price dips. I'll be honest, I haven't bought this dip yet. I'm waiting for 60K or lower to do it, but generally speaking, that's kind of the premise, right? Keep your HODL portfolio exactly that separate. You should never be HODLing leverage trades. It's just stupid. Again, you're going to get eaten up on fees. By the time you reach profit, you're not even going to be profitable anymore. It just doesn't make any sense. Okay, so let's go ahead and take a look here at the daily time frame. We are looking at, why don't we start with the monthly, because today is the first of the month. We want to kind of see what's going on. So let's go ahead and pull up our larger time frame here. We can kind of see we're still honoring our bull flag pattern here. I still think that we're due to see Bitcoin launch relatively near future. I would say the next few months, depending on the candidacy, personally, whoever is elected president to me will probably determine the price action and how hard it's going to move. But generally speaking, when you have a new president, first 2 years are bullish, the last 2 years are bearish. That's the general consensus. Either way you look at it, we're still looking pretty good on the monthly as far as moving averages. We're going to be good for a while. But when it comes to RSI and stochastic, we are still swinging down. We got to respect the fact that we haven't shown any improvement on this downtrend. Okay, because momentum's a pretty big deal on larger time frames. It may not seem like that, but at this point here, we got to take into consideration the fact that we have good momentum going down, or bad momentum, depending on how you look at it. However, if we do look here, we are still over 50 on the RSI. We're no longer overextended. It's a cooling off period. This is a very good sign. You want to have this. We can also recognize too that we have a doji candle here from last month, which was a pretty solid consideration or potential turnaround. So again, a lot of it hinges on candlestick closures, and at this point, last month was generally considered or construed as a bullish month. Okay, so those are all positive signs. Let's go and skip ahead to the daily and kind of get back on track and take a look at a few other key factors here on the right chart. And let's go ahead and see what's going on. So when it comes to the moving averages, I talked about this yesterday. We were testing the 100-day SMA on the daily. Generally, that's construed as a pretty strong or good support level. Okay, so me personally being below that now at this point, I think we are more likely to continue lower. That's not just like a switch that you flip and it's just instantly bearish, but we're broken bearish for the most part. We've already identified that being below the 20-day SMA. That's the first thing. We lost the trend line, and for the most part, we can expect the price to continue to pull back. Now, again, 50,000 range, I think I'm still a little skeptical about that. I think the psychological support at 60,000 should hold. If we get a wick down to 59K to fill that CME gap, I'm going to say go long at that range. It's roughly the range that I'm looking to go long. But on the same accord, we got some support below us at the 50 and the 200. They're all kind of hanging out in that low to mid 60 to 61 to 63 range. Let's look at the RSIs too and clarify just a few things here. We're under 50 on the RSI now. We have broken bearish. Again, this is not, if a switch that you just flip and it's all good and you're like, okay, we're bearish from now on. But if you do look at the RSI in correlation with the price action, generally speaking, when the RSI is below 50, you can see bearish divergences. When it breaks above 50, roughly right here, you can see bullish convergence, okay? Now again, it was under 50 on the RSI right here, you gotta keep in mind, so it's not an exact science. So when we look at this here, it's not like you're just gonna short your shirt off because you were under 50. It just implies we have more propensity to go down than up. That's really all there is to it. Stochastic RSI is trying to swing up, hasn't yet, so we haven't found our floor, and we can see MACD is diverging here. So the daily time frame, of course, as per usual, is exuding some bearish qualities here, which it has been for a few days now, right? We've been talking about that. We've been expecting the 64 to 63K range. Now, granted, I wished we had, had the opportunity last night while I was sleeping to have taken a trade at 63,000, but it's a different story altogether. Now, keep in mind, you don't just buy the dip to buy the dip because it feels like it's going to keep going lower. We do have a potential triple bottom here where we see the price action trying to recover there. So there is a good chance we could see the price pivot from here and bounce. But to me, with all the selling pressure and the lack of buying pressure, money flow index is super low. It doesn't make a ton of sense to take a long right now, even though I've been telling my community that we were considering a long at 63,000 for some time, okay? So again, that's got to change at some point, right? Now, I'm not going to be inherently bearish for the rest of the year just because of that, but I can tell you that there's just bearish qualities here and there's no reason not to see that, right? Okay, so we take here a look, we can see 30 on the RSI holding and bounced perfectly, as well as 20 on the MFI. So that in combination with this key fib level at about 63,700, there's a solid chance that is the potential bottom, or that we got that nice little bounce. But again, as I mentioned yesterday, even though that is a realistic thing to be able to buy those dips and to effectively be able to take a trade quickly, you cannot hold that and just be like, I'm going to go to the moon with my 50x leverage long. That is so foolhardy, it's not even funny. So please, please, please stop trusting those other idiots online showing how amazing they are with fantastic leverage when all they really did was get lucky. Okay, again, part of trading is a little bit of luck, I'm not going to lie, but it's just really frustrating to see that that's kind of the common or the norm now for cryptocurrency. So either way you look at it, what I'm getting at here is that dip, having bought that dip, that was one constellation I mentioned yesterday that you could have done, essentially bought that lower 30 on the RSI and 20 on the MFI. That usual will give you some positive results, but they're temporary, okay? As you can see here, came up to that 0.786 fib level, rejected perfectly off 64,900. That was supposed to be the support level for the price to bounce up to that golden pocket, and it never did, okay? So again, it is what it is, but at this point, we have tons of bearish divergences. The only thing we have left as a potential support, and this isn't even really a support level, it's more like a range, is that 62,600 mark, okay? So I really don't think that's gonna do much, but to just kind of just be a line on the chart, honestly. So at this point, we're below all moving averages, the important ones rather, and at this point, I don't really think we're gonna see much recovery. We're gonna have to wait and take a trade later if the opportunity arises. What I mean by that is, generally speaking, in these situations, you do not want to just jump in and buy the dip. You want to wait for consolidation and let the price action kind of average itself out there, build a foundation of volume, and then continue potentially higher. At this point, there's no reason to take a long. It just doesn't make any sense. Hourly time frame is going to also reiterate that for us. We're under the cloud, which is running synonymous with this descending trend line, lagging spans free and clear, and conversion lines below the baseline. So there's 0 out of like 40 reasons to not take a long position right now and to consider a short. Now, me personally, when I'm considering a short here, I'd much rather take a short when the price comes up to this golden pocket, rejects out at about 66,000, comes back down. That would be an awesome short. However, we don't always get what we want, because every time the price comes down, I keep trying to wait and be patient for the price to do a little bit of a bounce and to recover, and keep missing the opportunities. So again, that's just how it works. That's how trading is. You're going to consistently miss opportunities. But I'm glad that we haven't FOMO'd into any type of longs, right? That's the important thing. And ultimately as well, if we do take a look, majority of our shorts are profitable right now. So 32% from AVAX. Caspa, that was technically a long to the all-time high, roughly 50% there. And then of course we had ICP 2 shorts this week from some bearish rectangle breakdowns. So again, it hasn't been a terrible week. Could we have caught more opportunities? Sure, but I'd much rather miss bad opportunities and wait for good ones that never happen than the inverse, right? So again, don't force a trade, folks. It's okay. And it's not the end of the world if you missed out on anything here. There's still plenty of opportunity. I'm absolutely on board with the concept of the price action pulling back to fill the CME gap here now, especially now that we're starting to range closer to this lower, the most recent low. We break 63,500, it's absolutely going to be a realistic thing. It's just a matter of when this happens, okay? There is a possibility this may not occur. CME gaps are not always 100%, but at this range, how high the price action is with the amount of greed in the market and manipulation, there's no other way around it. And we're probably going to hit that level, okay? So I just say keep some dry powder, as some would say, and of course make sure that you are saving some money for your spot bag there, just to be safe. I personally don't want to get in between, until it's like 60K, 59K. I have some limit orders down there. But once more, we'll see when we get there, if we even get there. You never truly know. I do want to say thank you again to my community, of course, for some wonderful feedback. Thank you so much too as well for anyone who's been watching me for a long time, whether or not you're in my Discord or otherwise. I really appreciate the support. Hitting that like button, commenting below is really awesome, and really appreciate y'all. If you've been able to, you came together really awesome lately too, especially with all that BS with House of Crypto, which we're still kind of figuring things out. I'll have more to come on that one there, but it looks like there was just some shady stuff going on, unbeknownst to a lot of folks. All right, thanks again. We'll see you in the next one. Have a great rest of the day. Take care.